Hello everyone. Hope you're all solving the questions in relation to set off and carry forward of losses. In the previous session, we discussed about some of the solutions to problems given in the ICA material and some of the questions given in a task to you. Now let's continue with the discussion of some more problems in relation to the set off and carry forward of losses given in the ICA material. Up to question number 4 we have already done. Now let us solve the questions in relation to question number 5 onwards. Let us take question number 5. Aditya furnishes the following details for the year ended 31st March 2020 naturally. A lot of details are given and other things are also very similar. Mostly we'll have the heads of incomes and an inner column and an outer column, naturally same, nothing much different. So various things are there like income from salaries, that is going to be always positive. If there is a PGBP, that also will be there. If there is income from house property, that will also add. Then there is capital gains and income from other sources, if any. So just in a general situation as far as examination is concerned, first keep on writing all the heads of income. That is all the 5 heads of income can be written. If you read the question more carefully, you can understand which heads of incomes are there, which are not there. If not also, you don't need to waste time. Directly you can write all heads. If there is no income, just say nil, no problem. So let us take the positive incomes as usual one by one. So loss from speculative business, we don't care. Income from speculative business B is 5,000. So of course it will be under the PGBP. So let us call profit from speculative business. Let us call that as a profit from speculative business, and let us put it in the inner column. Amount is 5,000 rupees. Okay. Losses will come back to them later. Loss again, no need now. Income from salary positive computed, that should be there already. That is 300,000. That is 3 lakhs rupees. That is income from salary computed. Then loss from house property 2,50,000. Actually we don't need to wait here. Immediately without waiting we can just deduct that from the income from salary, because these two go along very well, and I told already the reason for it also. Minus 2,50,000 to be deducted from salary immediately, though other losses will come back to them later. If you want to come back to this later, that's okay also, no problem, according to your choice. But basically first round we have to write down all the positive items. Negative items, if something is so obvious like loss from house property, that can be done. If not, all of them can be done at a later stage. Then income from trading business 45,000. So there is also a PGBP from, let us call it income from trading business. Whatever is given under the head of PGBP only, income from trading business positive, that is 45,000. Next we have long-term capital gain, that is 2 lakhs. Long-term capital gain of 2 lakhs. Where from it has come, that doesn't matter. That is 2 lakhs long-term capital gain. Then there is a long-term capital loss. Loss will come back to it later. Then another long-term capital loss will come back to it later. Now there are other things also brought forward losses. That's it. Positive items wise, these are the only positive items we have. Now we can come to one by one the current losses. Then only we can go to the brought forward losses later. So let us take one by one. Loss from speculative business A 25,000. Can it be set off against the profit from the speculative business B? Yes, it can be. But how much? It can be only set off to the extent of only 5,000. 5,000 rupees only can be set off against that. So naturally the remaining 20,000 as usual will go to carry forward. That is going to be carried forward for a period of, always for a period of remaining 4 years. In this case, because it is a speculative business, 4 years it can be carried forward, and then if positive profits are there in the next years, that can be set off there. This year we can set off only 5,000 because that is the only profit that is available, no option. So this is loss over from speculative business. Treatment is over. Here you should write 5,000, 20,000 in the note below, not side like this. Then income from speculative business, already have taken that. Second, loss from specified business 20,000 can be set off only against the profits from specified business, and we don't have any such profits. So because we have profits only from trading business, so this 35 added 20,000, another loss, can be set off indefinitely, carried forward indefinitely, and can be set off against the profits of specified business only in future. So we cannot write any limit here. In the note I should write 20,000 can be carried forward to future years indefinitely. Income from salary 3 lakhs already have written. Loss from house property already you set off, no problem. Income from trading business already we have written. Long-term capital gain is written already 2 lakhs. Now the question comes about long-term capital loss. Long-term capital loss, can it be set off against long-term capital gain? Absolutely yes. Long-term capital loss can be set off against long-term capital gain, whatever it may be. There is no problem. So 75,000 is okay. But not only that, there is another long-term capital loss on the sale of listed shares on recognized stock exchange. STT was paid, that is 1,02,000. Can that be set off also? 1,02,000, yes, because once again, long-term capital loss can always be set off against long-term capital gain. No problem in that. But reverse is not possible. But only a question comes here. This is a common point. Because if the same thing instead of loss, if it was positive, it would have been taxable. This one, the last one, long-term capital gain, if at all it was a gain, just imagine, on the sale of listed shares in recognized stock exchange, STT paid, all these things satisfied, then the same thing would have been taxable. If it exceeds 1 lakh rupees, means what? There is an exemption up to 1 lakh rupees for this type of income. So can we call this an exempted income? And can we say that because it is exempted income, when there is a loss from it, we cannot set off? Can we say all this? Answer is no. Exempted income, when we say, it is fully exempt incomes. This is not fully exempt. It is only exempt to the extent of 1 lakh, and we don't have to worry about that 1 lakh now. That is only as a benefit that SSCs were given, that 1 lakh rupees limit. Other than that, there is no other problem with this income to be, or loss actually, to be set off. Just because income from the similar type of transaction was taxable after 1 lakh, we should not give set off possibility also after 1 lakh. Don't mix these provisions is what important point to note here. Otherwise, normally just simple provisions are applicable. Long-term capital loss can be set off against long-term capital gain irrespective of whatever that loss is. That loss could be anything inclusive of this sale of listed shares. These are the points to be noted here. Then we have losses arising. So both of them we have taken. Long-term capital loss included 75,000 also, as well as we have 1,02,000 also. Both are included there. Then losses from owning and maintaining resources pertaining to assessment year 18-19, 2,000. Sir, we cannot do anything because there is no profit from such activity in this year. We cannot set it off. Not possible to set it off. So, but how many years it can be further carried forward? 18-19 is the loss pertaining to 19-20 assessment year is over. 2021 we could not set off. So 2 more years this can be carried forward. Then brought forward loss from trading business 5,000 related to assessment year 15-16. 15-16, after that 8 years means definitely we are within the 8 years period, that is clear. So can this be set off here? Of course, yes, no problem. 5,000 can be very well set off because it is also from normal trading business. So we can call this as loss, or we can call this as brought forward loss from trading business, that is minus 5,000, which can be set off against the income of trading business. That's all. These are the items we have. So what is the income from salary finally? What we have after setting off this 50,000 and after taking into consideration all the other types of business losses and profits, What is the total of this? That is 40,000. And the total of this is going to be 23,000. There are no income from other sources. So in the exam, if you write it, just write it as nil. There is nothing there. So how much is going to be the total income of this particular SSE? Finally, 1,13,000. That is the total income or gross total income of this SSE. Always check what is that we are going to carry forward. What we are carrying forward, 20,000 rupees is related to what? Loss from speculative business of A. So loss from speculative business, not possible to be set off, so we are carrying forward. Loss from specified business, not possible to be set off, so we are carrying forward. This is what? Loss from owning and maintaining race horses, like activity of owning and maintaining race horses, 2,000. So these three are to be carried forward, but total income of the SC for this current year is 1,13,000. So that's the amount here to be noted. Here, what is this? 40,000 is there, no? Okay. Oh, sorry. There is a problem here with income from house property. We messed it up. Why? Because income from house property, loss from house property can be set off only up to what? Up to 2 lakhs. Correct. That cannot be set off more than 2 lakhs. Which means only 2 lakhs can be set off against the salaries income. 2,50,000 cannot be set off. There is a restriction there. We have to always remember that. Yeah, keeping that in mind. Now the income of this person is 1,63,000. So this is important to note. Such mistakes should not be done. Always when we take loss from house property, you have to keep in mind 2 lakhs rupees only is permissible, not anything more. So that point has to strike directly, blindly. We cannot always set off against salaries. Amount also has to be kept in mind. That's a lesson you can learn from this. So with this, the total amount is 1,63,000. Yes, and amounts which can be carried forward includes now this remaining 50,000 loss from house property also, which could not be set off. That is loss from house property, and that can be carried forward for 8 more years, and it can be set off only against income from house property of future years. So that is one thing, 50,000 to be carried forward. 20,000 loss from speculative business can be carried forward for 4 more years. 20,000 loss from specified business can be carried forward indefinitely, and 2,000, that is loss from activity of owning and maintaining resources, can be carried forward for 2 more years. All these things can be just written in small notes. Don't try to write paragraphs, big things like this. A simple note, or you can just give it like a table also. That is more effective. Income, amount, number of years it can be carried forward. This itself can be a table. That table can be the working notes, which gives all the information. And total income of the SSE is 1,63,000. That is question number 5. That's it. Now let's move on to question number 6. In question number 6, the details of Mr. Garg are given, who is a resident individual, and so many details related to this particular individual are given. And look at each of them one by one. Income from salary computed 15,000. So we are just taking it directly here as income from salary. That is a head of income that we have. Then we don't have any other loss and all. Then there must be PGBP, definitely. There is PGBP, and doesn't look, yeah, there is a capital gain also. So there is capital gain head of income, and there is income from other sources. If any, we'll write it, otherwise no problem, nothing there. Let us take one by one. Positives first. 15,000 income from salary. Income from business is 66,000. This is also to be taken since it is also positive. Then we have long-term capital gain. This is also positive. That is 10,800. That is long-term capital gain. Clearly to be segregated. Long-term capital gain. Loss or maintenance of resources, not possible to be set off against anything because there is no income from that activity. If there is, then only it could have been set off, otherwise not possible. So 15,000 cannot be set off. It has to be, if at all possible, that has to be only carried forward. for a period of 4 more years. That's it. That's what we can call it as loss from the activity of owning and maintaining resources. That goes to not to the answer. Next, loss from gambling 9,100 cannot be set off also, cannot be carried forward also. This is casual income. Casual income, if there is any loss, nothing to be done. It just has to be ignored. It cannot be set off, it cannot be carried forward. So 9,100, don't write anything about carry forward, but write it. It cannot be carried forward, it cannot be set off. That's it. And the other details of unabsorbed depreciation and brought forward losses pertaining to the last year, that is assessment year 1920, are also given below. There is an unabsorbed depreciation of 11,000 and there is a loss from speculative business of 22,000. Is there any income from speculative business in this year? In this year, is there an income from speculative business? No. When there is no income from speculative business, loss from speculative business which is brought forward, no way it can be set off. So it has to be definitely what? Loss from speculative business has to be carried forward. Of course, since it is related to last year, this year is finished, it can be carried forward only for 3 more years. Then we have a short-term capital loss 9,800. Can that be set off against long-term capital gain? Short-term capital loss brought forward, that is brought forward short-term capital loss. Can that be set off against long-term capital gain? Absolutely yes, there is no problem. Why? Because the restriction is on long-term capital loss but not on short-term capital loss. And anyway, within the years also there is a restriction on intra-head adjustment for capital gain. So within the head there is no problem. Short-term capital loss can always be set off against long-term capital gain. No restriction in that case. That's all. And what we have is unabsorbed depreciation of 11,000. Can this be reduced in PGBP? Of course, yes. No problem. So 11,000 reduced here. 22,000 could not be set off. 9,800 could be set off. These are the final items. So finally, what is the amounts that are going to the outer column? Just salaries, no adjustment. Here we have these two items. Add these two. Then we have 55,000. Then also here add these two. We have this. So finally, what is going to be the total income or gross total income of this particular SSC? That is supposed to be 71,000. That's all. That is a gross total income of the SSC. And what are the things to be carried forward? 22,000, which can be carried forward for 3 more years, because that is loss from speculative business. Same way, 15,000 loss from the activity of owning and maintaining resources can be carried forward for 4 more years. These are the only two things to be carried forward, and you should clearly write this. This is an important point here. Very important point to be noted also, and which point to be written in the notes also. Loss from gambling can neither be set off nor be carried forward. Not possible. You cannot set off the loss from gambling, neither can you carry it forward. These are the points to be noted in question number 6. Same way, question number 7. Let us move on to that. Question number 7. So in question number 7, the details related to Mr. Srivatsan are given. Resident Indian, aged 57 years, and compute the total income and also show the items eligible for carry forward. A typical question, perfect question for 5 marks or 6 marks in the examination. So details are given, all things are same, everything as usual, what we normally do. So we have to take inner column, outer column, and we have to take the heads of income one by one. So there is income from salaries, definitely yes, that is a head of income which is there. And income from house property is not there, but loss is there. But then there is leaving some space, whatever you can write, PGBP. I am leaving lesser space because I have to put it on screen. You can give bigger space on pages, that is better. Always leave space, sufficient space, you will not mess up the answers. You leave very small place, then you always will have an issue of where to fit that when it comes. So don't show conjugacy on leaving space. That is always a fundamental principle in the presentation. So PGBP is the next head, and naturally after leaving some space we have capital gains as another head, and we have income from other sources, if any, as one more head of income. So all the heads of income we write it Then we'll take the positive items first. Same procedure. Any number of questions, procedure is same. First income from salary is computed. That is computed 2 lakhs 20,000. So that is in our column 2 lakhs 20,000 computed already. So no need of deduction. Loss from house property. Now let us be double careful. It is not exceeding 1 lakh. It is not exceeding 2 lakhs. So definitely it can be immediately adjusted against income from salaries. So 1,90,000 is okay. In the earlier question it was exceeding 2 lakhs. So we restricted it to 2 lakhs. That has to be always taken care of. Then loss from cloth business, we'll come to that later. Income from speculation business is okay. That is 30,000. We call it profit. Income from speculative business. This is a positive item, which is 30,000 rupees. Then we have loss from something. We will come back to it later. Long-term capital gains, we have 2,50,000. So within the capital gains, we have long-term capital gains. Positive items only we are taking first. That is 2,50,000. Okay, fine. Then loss from card games, just ignore it. Just ignore it. Loss from card games, we should not be setting off also, carry forward also. Cannot be done anything to that. So nobody can claim any deduction. Array, I played cards and I got a loss, so let me set off and all. Not possible. Just ignore it. And write a note. Income from betting is 45,000. That is taxable as casual income. So income from betting is there. That is 45,000. That is definitely taxable. Flat rate 30%. Then life insurance premium paid is 45,000, which is actually useful for section 80C. That will come to it later, deductions chapter. Just for the time being, ignore that. It is not taxable definitely. End of the day, it is an expenditure, not an income. So don't try to include anywhere here. So not at all an income. So don't worry about it. First of all, compute the total income he is asking. For computing total income, we need to first compute gross total income, then give deductions. Deductions will come to it later. First, let us compute gross total income. Now go back to the question and take one by one negatives also. Income from salary is positive. It was taken already. Loss already taken from house property. Loss from cloth business is 2,40,000, which loss from cloth business, let us call it. Amount is 2,40,000. Loss, that is. Can it be set off against PGBP profits? Yes, there is no problem. But unfortunately, amount available under PGBP is only 30,000. So we can do that much only. We cannot set off more than that. So out of 2,40,000, we could set off only 30,000 here. Can we set off it remaining with the salaries? No, sir, not possible. That is only restriction. Loss from PGBP cannot be set off against head of salaries. It can be set off against any other head other than salaries. Any other head means any other head. So now can the same be set off against long-term capital gains? Yes. Of course, it can be set off against long-term capital gains also. How much can be set off there? Loss from cloth business 2,40,000, 30,000 already done means 2,10,000 can be set off. That is loss from cloth business can be set off against long-term capital gains. This is an important point to note. Long-term capital loss cannot be set off against anything other than long-term capital gains, but anything else can be set off against long-term capital gain. There is no issue. And business income loss also. Business loss cannot be set off against salaries, but it can be set off against any other head of income. So the restrictions is on the losses, not on the gain. So long-term capital gain can be used to set off any business loss, in this case, which is 2,10,000. Then income from speculative business, can it be used for setting off? Yes, of course it can be used. Again, the restriction is only on loss from speculation business, which cannot be set off against the income of normal business, but income from speculation business can be used for setting off loss from any business like cloth business in this case. So this 30,000 what we used is also correct. Then loss from specified business is a problem that could not be set off because there is no income from specified business and that can be carried forward indefinitely. Long-term capital gains, we have already 2,50,000 taken. Loss from card games to be ignored. Income from betting 45,000. It's already taken care of. So that's it. So what we have now is the gross total income calculation first. That is how much? Let us see. So total or gross total income of this particular SSC is going to be 1,15,000. This is gross total income, by the way, not the total income. And the carry forward possibility is there for this specified business 35 AD loss can be carried forward indefinitely. That is gross total income. Of course, there is a possibility of claiming Section 80C because of the life insurance premium paid 45,000. If that is also claimed, then the income will be finally that is 85,000. So how much is the amount that is paid here? That is 45,000. These things we will come to them in the deductions chapter. Though the amount paid is 45,000, 45,000 deduction cannot be claimed. Why? Because certain points you should remember from capital gains chapter, also certain points from income from other sources also. Why? Because the long-term capital gain, whatever it is, that is not eligible for Section 80 deductions. Same way, income from betting also, that is casual income, not eligible for Section 80 deductions. So what is eligible for 80 deductions in this case? Only to the extent of whatever is remaining in the income from salaries. So the deduction here can be allowed only up to 30,000. So that is why the total income is 85,000. Gross total income is 1,15,000. That is the problem in relation to the SSC, whose name is Mr. Srivatsan. Now, what are the things that can be carried forward? Loss from specified business, only one thing, that is 20,000 rupees. How many years it can be carried forward? Indefinitely. Right? That was question number 7. Now there is question number 8. This was a past examination question given for 8 marks. Question number 8 was given for 8 marks earlier. Quite possible to be asked also once again. Logic is same. Always it is the same. Nothing separate is going to be. It's all going to be more or less similar. Only the size of the question little bit changes. That's it. Nothing much. Now look at this question number 8. Read it carefully. Rajat submits the following information and he wants us to compute the total income and also compute the losses which can be carried forward. He has 2 houses, he says. House number 1, income is 72,000. House number 2, current year loss is 30,000. Can these two be set off? Absolutely yes. There is a provision for inter-source adjustment or intra-head adjustment. Both can be absolutely without any problem be set off. So what is the income from house property? In this case, what he has? Simply 42,000. So we can just use this headwise also. 72,000 is positive and 72,000 is positive here and negative is negative is how much? 30,000. So both can be done because it is intra head only. There is no problem here. You don't need to wait till the end also. So that is guaranteed, pakka, definitely to be done. So this is income from house property. So this is, let us call this house 1. This is house 2. Anyway, that is point number 1. Second point, he has 3 proprietary businesses. First business is textile business, which was discontinued from 31st October 2019, which is during the year. In that there is a current year loss of 40,000 and brought forward loss of last somewhere in assessment year 15-16 is also there. That is related to 15-16, which is still within 8 years back. So that is 95,000 is there. So if there is any profit, definitely these two, both are losses only. There is nothing profit here. So any of them can be set off against the incomes of current year, which we have to still face. So textile business, full loss. Then chemical business is discontinued in March 2017, not now. So current year there is no loss, no profit naturally because we did not even do the business. However, look at this. Bad debts allowed in the earlier years recovered during this year is 35,000. This becomes deemed profits. That's you have to remember section 41. When any deduction was allowed in the earlier years recovered during the year, that becomes PGBP, that becomes taxable. 35,000 will be taxable. However, Can this 35,000 be used for setting off the brought forward business losses? Absolutely yes. So whatever the brought forward losses are there, they can be used for setting off against this bad debts of 35,000. Leather business profit for the current year is 1 lakh. That is a profit first by time we are hearing here. And one more profit is section 41, 35,000. And share of profit in a firm in which is a partner 16,550. You should remember this. This is not taxable, that is exempt. Share of profit is always exempt. Since firm is already an SSC, firm would have paid tax on that. So don't even try to include anything. Just write a note about that it is exempt. Then we have long-term capital loss and short-term capital gain. These two are not possible to be adjusted. So long-term capital loss will carry forward. That's all. These are the only things he has. So one by one, we have to just check the incomes of this particular SSC head by head, one by one. So now let us take PGBP, the second one, PGBP. So what are the possibilities here? Under section 41, let us write that here. Under section 41, what was taxable? 35,000 rupees was taxable. Yes. Same way, leather business has a profit of, let us call this as profit from leather business. How much was that? 1 lakh rupees was taxable. Okay, that's okay. Then we have the brought forward losses of the same discontinued business, 50,000, but they can be set off now. And there is a brought forward loss. First of all, before setting off the brought forward losses, we have to set off the current year losses of any business. So textile business, let us do that first. Minus 40,000, that can be done. Then we have the brought forward losses of textile business also, and we have the brought forward losses of chemical business also. Any of them can be done because the amounts are available for setting off. So the brought forward loss in relation to the chemical business, first of all, this 50,000 can be adjusted against this 35,000 related to the same business, because that is a bad debt allowed in the earlier year recovered during the current year. So this brought forward loss is related to 2017-18 and this brought forward loss is related to 2015-16, which is better to do first, if available, better to do 95,000 first. Let us see whether it is available or not. 0, exactly available, 95,000. So 95,000 can be set off. This 35,000 can be carried forward. Sorry, this 50,000 can be carried forward. 45,000 is already taken as profit. So 50,000 brought forward loss can be carried forward to future years and it can be set off against PGBP in the future years. That is about PGBP. So here we have short-term capital gain under the head of capital gains. These are heads of incomes. Within that, we have to write clearly what is each of them. So we have what? Short-term capital gain. Under the head of capital gains, that is 60,000 rupees positive. Fine. Long-term capital loss cannot be set off against short-term capital gains. So this long-term capital loss, 35,000, there is no way it can be carried forward only for a period of 8 more years. And in future also it can be set off only against long-term capital gains. That point has to be written very clearly about this. Share of profit, you have to write a note that it is not taxable since it is exempt from tax. And this 50,000 business loss can be carried forward to future years. How many more years? That also you can write, because this is related to assessment year 17-18. We have completed 18-19, 19-20, 20-21, which means it can be carried forward for 5 more years. That's all. That is set off and carry forward. Of course, this will be available as the ATC deduction after we calculate the gross total income. Let us calculate the gross total income of the SSCs. That is 43,000 here. This is 0. If you take all the total of that, it is going to be exactly 0. And here short-term capital gain as it is, whatever, how much ever it is there, it is there. So total income of this SSC is going to be how much? Gross total income of the SSC is going to be 1,02,000. And ATC deduction, of course, if it is given around 10,000 rupees, then the total income of the SSC is going to be 92,000. Finally, that is the answer. 92,000. 1,02,000 is the gross total income. 92,000 is the total income of the SSE. And what can be carried forward? Two things can be carried forward. One is this 50,000 rupees in relation to the business loss of 2017-18. So you can call this just PGBP loss, which can be carried forward for 5 more years. Loss is related to 17-18, which can be carried forward for 5 more years. Then long-term capital loss of 35,000 can be carried forward for 8 more years, because that is related to current year. That's all. And you have to write a note very clearly. The share of profit is exempt under section 10(2)(a) because it is from the partnership firm which has already paid tax. That is the notes to be written. In any question, these type of notes have to be written. Yeah, like this, any questions we can solve. These are the questions which are available here. So let us quickly go through the remaining questions also. Just look at the answers, that is more than enough. The way to solve the questions, presentation I told you already. What are the key things here? You should write all the heads of incomes names, of course full forms, and you should have an inner column and outer column. First you should write all the positive items, and within the positive items, wherever there is a possibility of set off, write the negative items and take the net answer to the outer column. And wherever there is a possibility of carry forward, you should have a note on that. If you did not include any income within the main calculation, why you did not include, you should write a note on that. For everything, whatever you are doing here, there should be an explanation or a logic for that. It cannot be just like blindly adding some numbers and deducting some numbers. That will not give any marks to us. So clear presentation of why and what and how is going to give us full marks. That is a way these type of answers have to be presented, no option. And as we know, these are the questions which are almost compulsory in every exam, and good marks can be scored from this with simple provisions. There are no pages and pages of provisions in this chapter. It's a very simple, straightforward provisions. There is a possibility of inter-source adjustment, and there is no possibility of inter-source adjustment for some things. Same way, there is a possibility of inter-head adjustment, and there is no possibility of inter-head adjustment for some things. Restrictions are important to be noted. And there is a possibility of carry forward. How many years to be carried forward? That has to be remembered. And after carrying forward, there is no way there can be any inter-head adjustment except unabsorbed depreciation. That is not a carry forward provision. We need to understand unabsorbed depreciation is still section 32. It is not related to set off provisions. It is a different section altogether. So keeping those provisions in mind is an important aspect. Now let us move on to this question number 9. Geeta is a resident individual, giving her income details. So salary received as a partner from partnership firm 7,50,000, and the same was allowed to the firm. So first of all, what is the head of income under which this is taxable? Because this is not share of profit, this is salary. Salary received as a partnership from the partnership firm is taxable as PGBP. You should know that first. It is not salaries, it is PGBP. So PGBP is how much? 7,50,000. Then there is a loss, something which was told. Loss, will come to it later. Long-term capital gain on sale of land is 5 lakhs, that is gain. And then 51,000 received in cash from the friends in party, income from other sources, gift more than 50,000, taxable definitely. And 55,000 received towards dividend on listed equity shares of domestic companies is exempt under section 1034. Why? Because it did not exceed 10 lakhs rupees. Brought forward business loss of 18-19 assessment year is 12,50,000 rupees. So brought forward business loss can be set off against PGBP only under the same head, and we have 7,50,000 here available. Can this be set off against this? Absolutely yes, there is no problem. But 5 lakhs to be still carried forward to next year. So it's a simple question. 7,50,000 is the PGBP and 7,50,000 is set off, which is coming from this 12,50,000, and remaining 5 lakhs has to be carried forward for the next years. How many years also you can write, because this loss is related to assessment year 18-19. We have completed assessment year 19-20 and 20-21, which we set off. Means 6 more years, the remaining 5 lakhs rupees can be carried forward. That's it. Next we have other things like what? Gain, long-term capital gain of 5 lakhs. When you have a gain of 5 lakhs and there is a short-term capital loss or long-term capital loss. It's not mentioned, we have to find out. Loss on sale of shares Shares were held for 15 months. See, shares when they are held for more than 12 months, what is that? That is a long-term capital asset. So long-term capital loss only. So can long-term capital loss of 3 lakhs be set off against long-term capital gain? Absolutely no problem. So those two are set off. So finally 2 lakhs is going to be taxable. So what are available under capital gains chapter here, capital gains head here? Long-term capital gain and long-term capital loss also, which can be set off against each other. Then there is income from other sources, 51,000, that is automatically taxable. And this dividend anyway, 55,000 is exempt under section 1034. All these points once you write, gross total income of the SASI is 2 lakhs 51,000. So nothing from PGBP, 2 lakhs from capital gains, 51,000 from income from other sources, total is 2 lakhs 51,000. That's it. That is question number 9 related to Gita. Small question, 4 marks type question can be expected like this. Ultimately, whatever the size of the question may be, the points which we are going to touch is going to be same. Then, go to question number 10. Mr. P is a resident individual furnishing the following particulars. Once again, same. Income from salary is already computed 18,000. Net annual value of house property is given. So, we have to give a deduction under section 24A, 30%. So, if you give 30% deduction of 70,000, which is 21,000, automatically only the remaining amount, that is 49,000, is going to be taxable income from house property. Income from business 80,000 is okay, that is PGBP. Income from speculative business is also PGBP. Long-term capital gain on the sale of land is also taxable under the head of capital gains. These are all gains only. We will mention them under respective heads of income. Loss on maintenance of resources, that is loss which can be only set off against income from maintaining resources, which is not there. So no way we can do anything about this 9,000. It has to be carried forward only. Same way, loss on gambling, nothing to be done, no set off, no carry forward. And depreciation allowance under the Income Tax Act is 8,000, for which no treatment is given above. So definitely this 8,000 should be first deducted from income from business. Definitely under PGBP, 8,000 deduction has to be given. That is first priority. All things come later. But still there are some more things like unabsorbed depreciation. Can that be deducted? Can that be adjusted now in the current year? Absolutely yes, there is no problem. But loss from speculative business 16,000. Can that be adjusted here? Yes, but against what? Only income from speculative business. Only these two can be adjusted. But since there is a 16,000 loss brought forward, but only available income from speculative business is 12,000, remaining 4,000 has to be carried forward further. How many years? Since this loss is pertaining to the last year, 4 more years was available. In that 1 year is over. So 3 more years, this remaining 4,000 can be carried forward. Then same way there is a short-term capital loss of 7,800. It can be adjusted against long-term capital gain. There is no problem. These are the adjustments. Compute the gross total income and how much to be carried forward, how much cannot be carried forward also we have to indicate, he says. Straightforward question. First of all, income from salary 18,000, directly you take that. There is nothing to calculate there. Straight away, income from salary 18,000. Income from house property, as I said, since net annual value is given, you need to give a deduction under section 24 of 30%, that is 21,000. So 49,000 is taxable. Now the important point comes about income from business. Income from business, that is positive 80,000. If you take that positive 80,000, from that what are all deductible? Current year depreciation 8,000, yes. Unabsorbed depreciation 9,000, yes. Then we have income from speculative business 12,000, and entire amount can be set off because there is a total loss from speculative business of 16,000, in which 12,000 is adjusted here and 4,000 is carried forward here. So this is the amount of income from PGBP. So 80,000 minus 8,000 minus 9,000. Amount is 63,000, which goes to outer column. Then we have long-term capital gain on sale of land 15,800, and there is a brought forward short-term capital loss. Can these two be adjusted? Absolutely yes, no problem. So taxable capital gain will be 8,000. So what is the gross total income now? 1,38,000 is the gross total income of this particular SSC Mr. P. So these are the application of the provisions related to set off and carry forward of losses. Once again, revise the provisions very thoroughly, remember them very thoroughly, what are all possible to be set off where there are possible to be not set off, all of them has to be remembered very well. So read this also very thoroughly, where this is possible to be set off, where it is not possible to be set off. So what are the exceptions to section 70? Very important one. What are the exceptions to section 71 also? Already, all of them we have discussed already. Same way, carry forward, when it comes to carry forward, unabsorbed depreciation is one separate thing that can be carried forward and set off against any other head other than salaries. And how many years it can be carried forward? For indefinite period. So this is unabsorbed depreciation related provision, not related to this chapter, but this should be already there. So it can be set off against any head of income. That is an exception. Normally PGBP loss can be set off against only PGBP income, but exception is unabsorbed depreciation that can be set off against any head of income in future also, except salaries. And no time limit for carry forward. All other things, very simple. Loss from house property can be set off against income from house property only, and loss from business can be set off against PGBP income only. Speculation business anyway already restricted, specified business already restricted, long-term capital loss already restricted. Short-term capital loss is not restricted against long-term capital gains, but within the head definitely it is restricted. Normally all carry forward happens for 8 assessment years. Exceptions once again, one is this speculation business, only 4 years, and another one is activity of owning and maintaining resources also, that is also only 4 years. So these are the main provisions that you should remember. And these tables are enough actually to revise. So you have to write them rather than just listening and reading. That is one part, definitely that is important, but that is not enough. You have to write this summary, then you will never forget these provisions. Once you are thorough with the provisions, then definitely you can apply the provisions also easily in the examination, right? With that, we can conclude the questions in relation to the set off and carry forward of losses. We have done all the questions of ICA material, including illustrations and exercises. Now your job will be to check the answers for these MCQs. MCQs you have to do. Of course, the answers are given here already. So mostly you will be able to find out. If at all you go wrong also, where you went wrong, you will be able to find that out. Clear? So what are the points here to be noted? Some of them. For example, no loss which has not been determined in pursuance of a return filed shall be carried forward. Exception to this is what? So normally loss return is compulsory for any type of carry forward of losses and set off of losses. Exception is naturally the loss from house property and unabsorbed depreciation. Straight question. Provision is there. Straight away answer is this. Like that, other questions also, very straightforward questions. Wherever there is any small calculation involved, that you can do, but answers are already there. So with the knowledge of provisions so far, you should be able to solve these questions yourselves. Don't look at the answers first. Try to answer them on your own first. Then you can check the answers with your answers. Wherever there are mistakes, rectify those mistakes. Don't just leave them. Rectification of mistakes is the key to success for anybody. So with this, we can conclude this chapter of set off and carry forward of losses, and we'll move on to another chapter in the next class. Till then, take care. Bye bye. Thank you.